What's up, traders? It's Looney here, back with another quick but crucial lesson to level up your option trading. Today, we're breaking down something that can seem intimidating at first, but isn't as scary as it looks. And that is max loss or break even when selling puts. All right, let's get straight into it. When you sell a put, your max loss is your biggest red flag for most people. You see that big number and you think, wow, I could lose that much. I'm pulling up one right now. And if I go to trade options 25, and I already opened it up earlier today, but you're looking at that 652 and that seems like a big number. So let's say, for example, this one, max loss 652 and max profit is 48. At first glance, it seems risking 652 to win 48 might sound pretty bad, but there's actually a twist to this. The max loss of the 652 only happens if Riot stock drops to zero by expiration. And let's be real, that's a pretty extreme scenario. So if you see stock price zero, the max loss assumes that the worst case, which is stock price hitting rock bottom. So it's basically preparing for the worst. So the likelihood of this happening is extremely low for most stocks, especially ones like Riot, unless something catastrophic happens. But let's talk about something a little bit more realistic that you should be analyzing rather than your max loss. And that's break even. In this Riot example, the break even is 652. And that's because you're collecting 48 in premium. If we just do this simple math, 652 plus the premium, you get that $7 premium. So you're still making money, or at least not losing anything if the stock stays above that break even right here. As long as it stays above that break even, you're going to make money. Now, if it drops below, that's where things get tricky. You might get assigned shares. But in that scenario, you're actually getting Riot at a cheap discount because Riot right now is $7.30. And on this day, you'd be getting it for $6.52. Almost $1 difference, which is a massive difference when owning 100 shares of this. And some might be asking, why not just buy it when it hits $6.52? But with that, you don't know if that's truly going to happen or when it's going to happen. You can't really predict these things. This is just setting up that you're okay with that. And also you're getting paid. So if it doesn't go in your favor, in the sense that you don't actually get to collect the shares at the below the strike price, you're getting paid to do this, to set up for this contract. Furthermore, so even if you lose this trade, meaning you go below the strike price, which you could still make money in this area, but let's say you go below it, you're still buying Riot at $6.52, a discount from the current price. So this is why selling puts can actually be a win-win situation. Either you get to collect the premium and keep it if the stock stays above the strike, or you buy the shares you already wanted at a cheaper price. It's all about perspective. You're getting paid to wait. You're getting paid for time. And that's where time decay comes into play. You're waiting for the stock price to drop to a level you already like. So it puts you in control, and that's what makes selling puts so powerful. I'm doing this strategy on multiple positions. I already have 300 shares of Riot, but I did it on Mara, and I'm doing the opposite side where I got assigned and now I'm selling covered calls to get out or to maintain and getting paid for these shares. So next time you see that big max loss number when selling puts, don't let it scare you, because remember, the stock has to go to zero for this to happen. And you're getting paid premium upfront. So you're not much management. You kind of make money without doing anything. Worst case scenario, you get to buy shares at a price you were comfortable with to begin with. So if you look at this Riot $7.5 put that I signed up for a month ago, I got paid to sign up for this contract. I got paid $80. And that's just simply saying, I'm waiting for the stock to drop. And it did drop. My prediction was correct. I don't really try to predict things, but I felt that this is a good price that I'm comfortable owning. And I'm going to get assigned if it stays by this price. But Remember, it was in that gray area where I could still make profit as long as it doesn't fall below that break even, which is what you should be focusing on. You shouldn't really be focusing on the max loss, but more or less the break even is the number you should be looking at. Because that's where you can lose money, but like I said, you can make money in the long run. To own the shares. Worst case scenario, again, is you get to buy the shares at a price you were comfortable with to begin with. If you found this breakdown helpful and want to see more strategies like this, join my Discord. I have it set up right here. We're also discussing trades like this and helping each other grow as traders. And you can see I have level 2 chats and level 3 chats that go over these tricky situations and these confusing times. So don't forget to smash that like button, subscribe, and I'll catch you on the next one. Let's stay sharp and keep those gains rolling.